Hey everybody, what's going on? My name's Andy. My channel's Finding Value. If you guys like making money in the most undervalued assets in the world, click subscribe. Give me a thumbs up for this content. Before you guys just start piling in everything you've got into silver, whether it be physical silver or some of the silver mining companies, I want to make sure that you're making educated decisions. So I'm here to help financially educate everyone out there who's looking at this stuff. Now, I've been in the game for a while. I've done silver investing for well over 10 years. I know a little bit about how to value things. So I want to make sure that you know how to value things. So here we go. We're going through a silver crash course so you understand what you're getting into. So here we're going into a silver crash course to help you guys out. So first, this is the setup. This is what you need to understand. This is from a technical charting perspective. This is why they chose silver. We've got a cup and handle pattern. And what the pattern is it comes into a pattern. It comes up, makes a peak, develops a cup, which is a big bowl. That is a cup. And then it develops a handle. This handle should be greater or above the 50% line of the cup. And it is. We are now up around the 25, 26, 27 range up here. So it's already coming back up, making the cup and handle pattern. Usually what people do is they buy it on the break. That's about $49-ish, $48-ish. Once it breaks that, it's going to move quite substantially. On a logarithmic scale, you're looking at a $700 price target based off of the size of the cup. That is what the technical analysis shows us. Now you can run off these two trend lines here, and it'd be somewhere in between these two trend lines possibly. This trend line, depending on where we come up, could be $400. The top could be all the way up around $1,400. That is what the price projection is on a logarithmic chart. It doesn't necessarily mean it will get there, but we've got a large setup, which means it will run to some price much higher than where we are today. That's the key takeaway. Next, silver demand in the future is ridiculous. We've got a ton of demand coming from the automotive sector in terms of electric vehicles, in terms of hybrid electric vehicles, and in terms of internal combustion engines. It seems to just ramp way up. We're here in 2020, and it really ramps up. We also have a bunch of demand coming from renewables in terms of solar panels. So we have all this demand coming in the future, creating a very good position to be investing in silver because of the demand and because of the supply, which I'll show you right here. This is mine production from the top 10 largest silver producing countries. New mine supply is in decline. We are actually declining from a supply perspective. So we have demand that's wrapping up at this massive, almost greater than linear rate, which is an exponential almost demand curve. And we've got supply declining, at least at current prices. We'll have to see if this goes up when price goes up. So these are the metals that are most impacted by new technology. This is kind of more the electric, advanced robotics, renewable energy, and advanced. Can't even read that, computation. So these are the metals that I would focus on going forward for a commodities boom that we are in. And if you notice, here's silver right here. And on this channel, we participate in investments with tin, cobalt, silver, nickel, gold, even some of these other ones down here. Some of the platinum group metals, which is platinum and palladium. We are very heavily in platinum. But here's silver right here. It is one that is going to be most impacted by new technology. It's a great investment, irrespective of the Wall Street bets. Usually what you want to do is you want to look at a cost curve, and this is silver. This is the global primary silver mine production cost in 2019. And what this tells us is that $25, there's still high-cost producers that would produce at even higher levels than $25 an hour. What this means when we were buying in the $16, $17, $18 range is that we were below the high-cost producers. These are the low-cost producers. Eventually, when we try to mine all of this silver for the demand, we are going to deplete the low-cost reserves out of the world. Eventually, we're going to have to replace this with higher cost production. This is your minimum price for silver as we move forward as a base where it could fall back to. I think that this is going to go up substantially. It could be $30, $40, $50 quite easily. Plus, you've got the inflation aspect pushing everything higher in terms of cost curves for mining companies. Next, these are the ratios against all the other metals, and the ratios tell us relative value. Gold to silver ratio tells us that silver is of good value. It's around 70 something right now. Palladium to silver ratio is, I think, over 100, which is very, very good value. Rhodium went up through the moon, so silver, it's probably way up here, but silver is of good value to rhodium. And platinum to silver ratio, I think platinum's still cheaper on a historical basis, but platinum is an absolute steal right now. So silver is still a very good bet when looking at its relative value in relationship to the value of all the other metals. Now, I want to talk about the silver demand. In the 2017 report by the World Bank, we currently use 24,000 tons annually of silver. They're going to want to go between 400,000 tons and 700,000 tons of demand by 2050. And I know 2050 is out there, but we have to ramp up to this demand. Now, how much is 500,000 tons of silver per year? Demand by 2050, 500,000 tons is 16 billion ounces that year. That is 17.8 times the amount of total silver produced today. Now, how much silver is in the world? Let's look at that. How much silver reserves are left? They're saying that 560,000 metric tons of silver reserves remain around the world, according to the USGS report. That is 19.7 billion reserves left in the world. They want to use 16 billion ounces, which is almost the same per year. Now, 500,000 tons, we've got 1.6 million tons of silver has been produced ever. They want to use 1/3 of what's ever been produced ever in each year by 2050. So the demand is absolutely rocketing forward to the upside. So we have a huge opportunity here, irrespective of the Wall Street bets. I would never recommend buying something, or first off, this is a financial education channel only. I can't give financial advice, and this is not advice. I'm educating you guys to make well-informed decisions on your own. And this demand setup is going to drive a ton of deficits, which means silver's price is going to go up over the long term anyway. I'm not going to put information in front of you that I think is going to be detrimental to your wealth building. I'm putting information in front of you guys which I would number one, invest in personally, and two, believe that it to be a good value. So buying physical silver, buying silver mining companies, the chart patterns, the technical setups, they're all good. So if you want to participate in this, it is of good financial sense to do it. Now, if Wall Street bets don't pan out, I still think it's a good bet. So I wanted to make sure that you guys know what you're getting into. This is what you're supposed to look at when you're an investor. You look at the cost curves, you look at the market balance out in the future, and you look at possible ways to invest given those market balances and deficits and demands. My opinion and what I'm doing, remember this is not advice, is I own a lot of physical metals. And the reason I own that is because if something happens where, let's say price goes to $1,000 an ounce, let's say that happens. If it goes to $1,000 an ounce, you might see countries nationalize their mines and say, nope, you guys aren't going to take the profits, we're going to keep it. Physical metal, you have it in your possession, they can't do that. They can't tax it away from you. It's a very low-risk way to play this, in my opinion. Now, the mining companies, they're going to have more leverage. I understand that. But you're going to carry a lot more risk if we hit a number that's way up there. If it's $500 an ounce or more, which is quite expensive, some of these mines or taxes could ramp them up quite substantially. There's a risk of that. And also keep in mind that if it does hit $1,000 an ounce, I don't think it'll be up there for a super long period of time. So the physical aspect, you can hold on to it for a very long time. I think it's one of the best investments that I know of, because you have currency protection. If currencies were to go to hell, you're protected against that, because silver is considered a monetary metal. You've got the industrial side that's just going to kill it in terms of demand in the future, in terms of market deficits. So having some physical, I think, is an absolute smart thing to do, and to hold on to it, and always have physical precious metals as an insurance against currency fallout or whatever else there is in terms of currencies. And then if you want to be trading in and out, I would go with the silver miners. I've given a video on what that looks like. Check it out. Those are the ones that I think are technically pretty sound. Those are the ones that I think are just going to blow through and really run, blow through their chart patterns. So if you like this content, give me a thumbs up. Leave comments below if you guys need help. I'm here for you. And subscribe to the channel if you haven't done so already. Thank you for listening. This is Finding Value.